Hey everyone, welcome to Blockchain Banter Trading Crypto. I'm Jen, I'm your host, and I'm here with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. As always, great to have you here. Happy Tuesday. It feels like we've been talking about this rate cut, right? I'm just going to kind of jump into it because I've been really looking forward to hearing what your guys' thoughts are. We've been talking about the rate cut, whether it's going to be 25 basis points, 50 basis points. It wound up being 50, right? Market reacted a certain way. I'm really curious to hear what your thoughts on that are. You know, it seems like, I mean, we definitely didn't go to the depths of, you know, where we could have, where we went quite the opposite direction, right?
Yeah, I mean, it's not the outcome I wanted, right? I said that I thought a conservative 25 basis point cut would be more considered. The steeper the cut, the more likely it is that the government is anticipating more of a cataclysmic recession, and they're trying to sort of stave that off. And so it doesn't necessarily mean that it has to precipitate immediately. And I think that Keith and I have observed this in previous calls, that there's a bit of a lag time between the rate cuts and when the eventual recession hits. So there's no telling when it's going to start. But as I pointed out in previous calls, like there are other indicators that suggest that a significant drawdown is overdue. And same things I've always pointed to, rising tensions in the Middle East. Obviously, over the last few weeks, that has been presented in spades. We've also seen, things like there's a new index that I've only just became aware of, which is something like the home buyers ambition or something. It's a measure of, it's basically a poll where they are trying to measure how motivated people are to buy real estate. And it's at basically all-time lows. It's basically fallen off of a cliff. And generally, this thing is something that signals an oncoming recession.
Well, that's just if I can chime into that a bit.
Of course,
housing and unemployment are historically have been the two laggiest, if that's a word, most lagging of the lagging indicators. So those are things that the Fed has watched, and we talk a lot about unemployment because everybody understands unemployment, and the housing market a little bit different, and there's lots of outlier cities in the U.S. that have different things going on than the rest of the country does, but interest in buying and in mortgages is low because interest rates have been at high. So that doesn't mean that there haven't been home sales. The issue has been the expensive, multi-million-dollar homes have still been selling, and they ain't coming down in price because those are cash buyers, and versus the average American who's taking out traditionally a 30-year mortgage is waiting for rates to come down. And so we watch things like new mortgage applications, like building permits for housing, right? So when they do construction, they have to pull permits to do that construction, and so those are all metrics within that, under the umbrella of housing and real estate that we watch.
Yeah, and there's obviously some wisdom to that, but we have to remember everything in the appropriate scale. The interest rates have been hiked, sure, for quite aggressively for a relatively long period of time, but I think we're barely back to where the interest rates were in, for example, 2019. There's only so many, you cannot get the kind of interest rate relief that we used to get because there just isn't that much interest rate to cut anymore.
Mark, I was reading that the goal now is to get it to 2.5%, something like that. I think with the rate cut, what did it bring it down to? 5.5, something around there. 2019 was when I bought my home. My interest rate was 3.5 or 3.75.
Hang on, I have this place. Let me go look at the
So I think
metrics and I can tell
the
you.
average, like if you, I'm not sure if it's like I think it's the median. If you have a look at the median interest rate since like the beginning of the 1970s, it's somewhere around like 7.75, right? Like
But
it's
we
just
haven't
shy
been
of
there.
8%.
But we haven't been that high in decades.
That's my
You know.
point. That's my point. Like the reason why home prices have been allowed to escalate to the prices that they are now is because we've been cutting interest rates.
Right,
You
but
know,
we were near
if you were
zero. You know, I mean,
right, yeah, I had a lot of my friends take out, you know, basically zero down mortgages during the pandemic because the government was handing out, well, you know, the banks were being incentivized to hand out loans to keep the real estate prices high.
I don't know though, Mark. I don't know if I see that. I mean, at least in my area, what was it, a year and a half, 2 years ago, something like that. I'm always looking at different homes in real estate, and the price of homes, like I said, I bought mine in 2019. They're sending me things about refinancing. I'm not refinancing so that I could double my interest rate. I mean, it was that high. And the value of homes were escalating. So I'm not sure, you know, what area you're speaking to generally, but I can at least say in Arizona or in the area that I was speaking to, or just, you know, in general here, the housing market, the cost of houses was up drastically, and
That's
the
what I'm
interest
saying.
rate was up that high. So we can't say it hasn't been that high in decades, right? I mean, it wasn't that long ago. It was a couple of years ago.
Wait, what do you mean it hasn't been that high in decades? I mean the interest rate hasn't been that high in decades.
Oh, okay. Well,
And that's the point, is that the interest rate has been trending down for like 40 years. And that marks the appreciation of real estate prices pretty well. And now that like it's a bottom, right? You can literally trade the interest rate the same way that you would do technical analysis on a chart if you like, except that we know that the interest rate cannot go below zero. And we dropped it to zero during the last recession. We may do it again this time. But eventually there won't be interest rate left to cut to keep you know, to
well,
keep
I don't
the
think that
value of homes up.
I think they identified the fact that there was a zero interest rate or close to it was part of the problem, and that we're not likely to see
Right.
that again. The terminal rate that they're targeting, it looks like, is going to be 2.9%, and it's going to take a year or two to get there. But that should, you know, historically, and this is what's perplexing about the housing market. I don't know how deep we want to go down this rabbit hole, but you know, here in Miami, which is an outlier market, huge international population here, a lot of international money here, a lot of real estate investment here. Housing prices have skyrocketed. I mean, insane. What's happened on my street? I can tell you that homes have almost doubled in price in the last 5 years.
same.
Right. And this is, sorry, I
and,
didn't mean to
and
interrupt.
you know, and this is with high interest rates. And the reason it's gone up so much is because big real estate groups are buying up these properties
100%.
and they're collectively driving the price up.
Well,
and
yeah,
is,
but
and this
why?
is, pardon me?
But why? Like, so these big investors, like, why are they buying the real estate?
They're buying the real estate because they're getting a return. They're buying land, or they're buying distressed properties and knocking them down. And, you know, instead of building a $400,000 house, they're building a $1.5 million house, and the land costs them the same money, right? Either way.
Right.
And, you know, right on my street, no, excuse me, not on my street, but in my neighborhood down the street from us, there was a piece of property, and they were trying to build multifamily. You know, they're trying to build apartments there. And and the county commission voted it down, voted against putting a multi-family, multi-unit property there because of the traffic and parking, et cetera, et cetera. And so what they do, they built 10 single family homes starting at $1.6 million each,
Right.
in an area that, was $500,000
Brought the
homes.
value of your house up,
You're-
right?
Well, unfortunately, I rent my house, so that doesn't
Okay,
help
never
me.
mind.
That doesn't help me at all. But yes, the value of this property has almost doubled. And
Mhm.
so, yeah, in hindsight, who knew? So yeah, I'm looking now because I'm going to be moving next year. And I'm for the first time starting to see prices of homes come down. Not the upper end. The upper end is still up there, but the mid-range and lower range homes are starting to come down. Now, the problem is when interest rates come down, housing prices tend to go up because there's an offset, right? Sellers know that if the buyer has to spend more money at the bank on interest, then they can't afford as much house. And when that interest rate comes down, then you can, inversely afford more house. So how the market responds to this as we start seeing cuts, make their way through the system here, going to be interesting.
Yeah.
See, and
There's an
that's where
asymmetry.
Go
There's
ahead,
an
Mark.
asymmetry to it as well, because when you're right, like obviously the thing that surges the real estate market is interest rate cuts, because borrowing is cheap, and you can punch much farther above your weight and buy more expensive properties. But it's not always true that when the interest rate goes back up, that the price of property necessarily comes down very quickly. And it depends on the specific property. But in general, when the interest rate goes up, landowners or homeowners, landlords, I should say, will increase the rent, but disproportionately with the interest rate.
Well,
and so for people that already have, yeah. So like if their mortgage is going up by like 5% or something, I mean, that's just to choose a number. You might find that the rent increases by that plus a small margin. Like while I'm here hiking
right,
the
but
cost of
mortgages.
rent,
So number one, what is strange about this time is different is that when interest rates went up, so did real estate prices.
Yes, they
because
did.
of all of this outside money coming in to buy the properties. And most landlords, who own properties, unless they have an adjustable mortgage,
They're
their rates
locked in
aren't
at
going
their
up.
rate.
If they have a mortgage rate locked in from 5 years ago, they're sitting pretty, and they can't afford to and it makes no sense to refinance because interest rates are higher than what they financed at. So, people who bought 5 years ago probably, with good credit, were probably at 3.5% interest.
That was me. I'm not refinancing.
No,
I mean, I can if I want to. The value of my home has gone up quite a bit to where great, cash on hand, wonderful, but why? There's
yeah,
no
there's no
reason for me
value. There's
to.
no
Like I said,
value
I'd
in
be
you
doubling. I would have been
refinancing.
doubling my.
There's no value in you refinancing if the interest rate is higher. But now that you have more equity in your house, you might consider a HELOC, which is a home equity line of credit against your house, which
If I
is
needed
cash
to.
if you need it. Cash
Yeah.
to buy more Bitcoin. That's the Michael Saylor formula right
It's
there.
true.
Leverage your credit, buy more
Take
Bitcoin.
out a second mortage on your home, everybody. Not financial advice.
Right. That's not my advice. That's Michael Saylor's thing. I that scares the hell out of me to think about people doing that.
It's scary. It really is scary. Okay, so let's bring it back in a minute, right? Mark, you want to throw a final thought at that real fast?
Yeah, just really quickly, like it's important to remember that like the real estate is one of the very few investment vehicles that is easily addressable with fundamental analysis, in the sense that it's not necessarily a speculative asset, or at least not entirely. the ability, or like, let's say the capacity of the real estate market to grow is dependent on the salaries of young home buyers and their willingness to part with that salary to purchase property. You know, like there is like there is something called the like the Miller model for real estate, where you basically draw a crosshair, and there's like, you know, available land, and, you know, rental prices, property prices, and, you know, building booms where people build new property instead of buying old ones. And it's supposed to follow like this kind of cycle, and it gets interrupted sometimes, but it usually like holds relatively true. And, you know, it's one of these, you know, it's economics, so it's not like, it doesn't reflect reality even very well most of the time, but you can kind of understand what it's driving at. And so when housing prices continue to increase, and, you know, especially at an accelerating rate, despite you know, people, like regular people, not having the either the will, which is what I said about this you know, this new indicator about how ambitious people are to buy property being at a relative all-time low, or at least a local bottom, when that will is low and their earnings are going down, right? Like the cost of real estate versus the increase in salary over, you know, over similar time periods, it is disproportionate. And more than that, you know, savings, like just across the world, like people's savings is relatively low. And consumer credit, including consumer credit default rates, are spiking. Like the amount of money that people can spend,
The average
and, you know,
person's in a lot
remember,
of debt.
yeah, lending to these people is prohibited, right? Banks will not, it doesn't matter how low the interest rate goes. If you have, you know, $45,000 of unpaid credit card debt and you've defaulted, you are now no longer eligible for a mortgage. And these are the kinds of things that we're seeing. It doesn't matter how low the interest rate gets. There are fewer and fewer people that even qualify for a loan. And that's interesting, because we're seeing a, like you would call it, like in technical analysis, you call this a divergence, right? It's when the price of something continues doing stuff that doesn't make sense, right? It's like when people pay attention to like, you know, transport stocks and productivity versus, you know, the GDP of an area and things. You expect certain things to be correlated. In real estate, there is a speculative element to it, which is why it's not impervious to this kind of analysis, but it is resistant to it. But I would say that the divergence that we're seeing is relatively profound. And these kinds of divergences usually don't end well. These are the things that we look for when we think that there's a speculative bubble. And I think that real estate all across the world kind of has the hallmarks of a speculative bubble.
Well, does it stop at real estate, though, is my question.
No,
You know,
of course not.
we-
No.
Well, that's what I mean. I'm bringing it kind of back to what we were talking about earlier, right? Like, it's not like it stops at real estate. Like, the rate cut
Correct.
goes far beyond this, you know?
Yeah,
We're
yeah. Real
looking
estate
at
is just
how-
another market.
Right. The market in general, right? Or markets
Yeah. It's just
in
it's just hard
general.
because, like, on
And I'm
calls
not
like
knocking
this one.
what we do, or you know what I mean, what it is
No.
that we as individuals are choosing to invest in, right? I'm just saying,
Right.
you know, like we've all been looking forward, like I shouldn't say looking forward to this, but really just kind of waiting to see whether or not, like we said, 25, 50 basis points, what is it going to be and what effect is this going to have on us? And I have, you know, I look and I think that a lot of people have a tendency to think that if the charts are green, then everything is going well. It's all good, right? And this is kind of where we look at the order book. This is where we look at the liquidity. This is where we dig a little bit deeper and say, yes, the market, you know, things appear to be going well. And yep, you know, it's up and it's 63,000 now, and it was 58, you know, not long ago, and this is looking good. But is it really looking that good, right?
Right, exactly. And like I think that you've hit the nail on the head. I would say that the only or the most important contradistinction between like the real estate market and what we usually talk about, things like Bitcoin and Ethereum and other cryptocurrency tokens, is that in general, and some may disagree with me, but cryptocurrency I still consider to be like pure speculation. You know, like it is like no one needs like Bitcoin to survive. Like it's not and you know, like I said, there are going to be maximalists out there that will say that, you know, they will die inside or something if they couldn't have this thing. But what I mean is, like, it's not essential for survival. Whereas things like, you know, housing kind of is essential for survival. And so that's what I mean about things being, you know, amenable to fundamentals analysis, whereas, you know, cryptocurrencies generally don't behave that way. And so in a purely speculative market, it's really, you know, exciting and unpredictable, and, you know, prices can go, you know, wild to the upside and to the downside. But when it starts to affect the way that people are actually able to live, this is when we're talking about, you know, like not just a recession, but actually an oncoming depression. And those are the kinds of things I'm looking at. And when I'm worried about a depression occurring, I'm not looking at the price of Bitcoin. I'm looking at the price of houses. Like, that's a speculative bubble that has a much more dangerous outlook than any cryptocurrency would.
Keith, do you have any thoughts on this? You want to add to it at all?
Well, you know, the housing market, obviously, what was it, 2008 when we had the big housing crash?
Yeah.
And that was related to subprime mortgages and shitty lending practices, right? Like
And what was
Mark was just saying,
derivative?
you can't, you know, if you've defaulted and you've got bad credit, then you don't qualify for a mortgage on a $500,000 house. Yet people were getting them.
People got them anyway. Yeah.
Right.
Yeah.
And so, you know, how is this going to unfold when it's all said and done? Right. Because, you know, part of the, how should I say, campaigning that's happening in politics right now is about the cost of living and housing prices. So, you know, there's no discussion of, oh, we're going to cap mortgages and make it easier for people to qualify for mortgages. It's we're going to build more supply. We're going to build cheaper housing. We're going to build more cost-effective housing, and by increasing the supply, then that will bring down the price. Well, again, it depends on who's doing that. When you have real estate groups coming in and buying up all of the available supply within the market, they are the ones that are manipulating the price. So, you know, I don't know how that works. Not sure how that's going to work.
It is a whale game. And, you know, I've heard a lot, like, especially from the United States, like, there are a lot of, like, very sober opinions about, like, limiting the, like, access of hedge funds to things like real estate as, like, an investment vehicle for precisely
and why
this
do you
reason.
why do you think guys like Grant Cardone, who, and I'm not sure if you're familiar, but he's a huge real estate mogul, very vocal on X. Why do you think he is beating the drum so hard for Trump? You know, because he's scared of an unrealized capital gains tax. We're all scared of an unrealized capital gains tax, right? I have a hard time.
To be fair, unrealized capital gains is a really bad idea.
Well, like, I don't know anybody who thinks it's a good idea, and they could say, and they can and do say whatever they want at this point. Saying it and actually having it pass into law are two completely different animals. And so that's going to be a hard sell. I don't care if it's a 5% tax on unrealized capital gains. It's a hard sell. But that guy is screaming from the rooftops because his whole business rides on that. I understand why why he feels that way, but you know, to me, well, I'm not going to turn this into a political discussion. So, you know, that's all I'm going to say about that.
We'll quit while we're ahead.
And in terms of, you know, bringing this back around to the market, the stock market and the crypto market, you know, going into the rate cuts, I was also of the opinion, and I was vocal about this, that, you know, I felt like a larger cut was going to kind of stoke fears of a bigger problem. And it's funny, I always say, when I'm talking about this stuff, that I'm not an economist, and like through the every week when we had new economic data coming out, is this week going to be bad news equals good news, or good news equals good news, whatever. And so I think at this point, now that we know that the cutting cycle has begun, and that we know what the terminal rate is, and we know what the timing to get there is, then does that mean that good news equals good news from here, from this day forward? I don't know. I would think so, but I expected to see a 25 basis point cut, and I expected that if we had a 50 basis point cut, that we would. I really expected a bit of a sell the news event either way, and we got a little bit of a dip, but it was very short lived. It was very shallow and very short lived. I mean,
You think it's done?
well, not necessarily.
I
I think that was just on the day of the announcement. 24 hours after the announcement, or through the weekend. I mean, the stock market closed red that Friday, and obviously opened Monday with huge gains. So the market had a little time to marinate on what had happened, and I heard some interesting commentary from Jay Clayton, who's the former SEC chair prior to Gensler, and he said that Powell really telegraphed that cuts were coming from the Jackson Hole meeting, and the FOMC wasn't meeting during August, but he really telegraphed that was coming, and they all thought 25 basis points was appropriate then, and they thought that 25 basis points was appropriate in September. So maybe going to the 50 basis point cut was really just catching up to what they weren't physically in place to do in August. So that's one that's one approach. Interesting perspective. The other perspective I've heard is that maybe this is just a matter of Powell just wanting to be safe and just be aggressive and make sure that they can get a handle on unemployment. There's been all of the bears and the doomsdayers that I hear saying recession, it's inevitable, and are screaming that they don't feel that the data that we've been getting is accurate, and that there's always downward revision. There's always revisions, and we don't always, they don't make a bunch of noise about the revisions, and that, I don't know. There's no way of really knowing whether we're getting accurate data on unemployment, or any of it for that matter. All we can do is go off of the data that's in front that they give us. Unless there's another way to track that, I don't know. But you would think that even if there is some smoke and mirrors going on with the reporting, you would think that the Fed is working off of the most accurate data that they can get a hold of. So here we are, right? So now does the next cut? It's been telegraphed that we were going to get 100 basis points between September and the end of the year. Does that remain the target? Or does it go to 125 basis points? Does it cut back to 75 basis points? I don't know. Like it's not enough time for any of this. Remember how long it took for cuts for the increases to work their way through the system. It also takes time for the decreases to work their way through the system. Now, the one, I guess the glaring difference is on the way up, we weren't sure how high they were going to go. On the way down, we know how low they're going to go. They've told us what the terminal rate is. And so now is the market forward thinking and forward looking and just baking it all in? Or is there still going to be does the market still have anxiety month after month, cut after cut?
Keith, what's the order book looking like right now? You're expecting more of a sell-off. Where's the liquidity at? Has it been moving around a lot since the announcement? What was it, Wednesday? I think,
Well,
right?
Interestingly, we saw some guardrails come into place over the weekend,
Yeah.
and those were taken out on Monday. Yeah, I mean, when I say taken out, not pulled, but those orders were actually filled on Monday.
Oh,
But the broader range is largely intact, and I think that we stay this way. We're now, what's the date today? The 24th.
24.
We're a week away from the monthly close. It's a monthly and quarterly close, and so you know, maybe we get some clarity off of that. Of course, we have the election, which is also a reason that things just might hover. I think, and I believe this, and I'm starting to see a lot of posts, that it doesn't matter who wins the election. Market's going to do what it does. Not going to change. It's not going to change Bitcoin's outlook. There might be a knee-jerk reaction on the election. I'm sure there's going to be some chaos and confusion around the election because we already know that Republicans are trying to do that. We've already
You're
seen,
trying so hard not to make it a political conversation.
we've already seen we're already seeing this happen. They're changing laws in Georgia as we speak. Despite legal counsel telling them not to do it, that they couldn't do it. So we'll see what happens. They're looking for a hand count vote in Georgia. How long is it going to take to hand count 11 million votes?
Maybe it beats 4 years later finding out that all the votes weren't counted or double counted or something of the sort. Because I think that's what we're looking at now, though, right?
Right. So it's just a stall tactic to create chaos and doubt in the system. But that's another discussion. The bottom line is when are we going to see the real breakout or the real breakdown? And
or are we?
We are. Well, we're hovering. We're hovering in a range.
We've been hovering.
And we can hover for an extended period of time as we have been. And historically, consolidations are pretty good. And so I'll show you the order book where we're sitting, but I also show you some interesting stuff with moving averages that it's like the market knows what levels, the algos know what levels we're watching, and they just nick past them just a little bit to seed some doubt, right? So that oh yeah, it's holding, but we wicked below it. And and hey, we got through resistance, but it replenished. And so where do we ultimately end up? And so let's start on I guess we can start on the order book because that's what Jen's asking about. So let me share that.
I'm just kind of curious, it's like we always say that the liquidity, you look at the order book and where liquidity is placed and when it's being moved around, and even just the what do you call them, Keith? The classes.
Right, the order classes and the CVD.
Classes, right? I mean, it's telling,
Absolutely. And so what we saw, of course, you catch me trying to refresh the screen and watch it not. Why don't you just choke on me now? While I'm waiting for that to load. Oh, there you go. So you remember a couple weeks ago.
What are we looking at? 2 years, 2.5 years?
This is a 3 year.
3 year.
And you remember when this happened this was the 6th of the month, right? So first week of the month, when we saw this ladder of bid liquidity come into place, it was like, okay, we're finally seeing bid side liquidity outclass the asks in this near range, and that was setting the stage for a move up, and we got it. And so now we have resistance back in place, and it's worth noting that we are continuing to see an erosion from up above, right? And that's because all through this period, some of this liquidity from up here has moved down into the active trading range, and that's that's what's helped keep price suppressed. And so we see this suppression happening here to the tune of about 65 million, 56 million at this 65K range. And that's not a huge amount, but it is, as you can see, enough to hold us in place for the moment. So if you look at previous times that we've had situations like this, right? Here we go. It took some time for this to play out, right? Here's another, it's not like it's an instant move. And these quick moves to me are sketchy, right? We finally got some retest of this, and it actually, since this is a line chart, we don't see the wicks. We did actually have wicks down to this, sub 50K. So we did retrace this move finally. Could we potentially see that happening down here? Well, the door's open for that, but at the moment we just don't have the sentiment. We have decent support still down here at the 50 to 51.5, 52K range. But what we had at 55K has eroded quite a bit here, as you can see. So if we drill
and again,
in,
when you say eroded, you mean filled.
Yeah, well, geez, my connection is just horrible today. Some of it has been filled, some of it gets pulled. Let's go to the monthly. Okay, so you can see here, we had this over the weekend, right? This was like our weekend guardrails. We had, liquidity overhead. We had support down below. And then yesterday we took this out here, just sub 65K. And so we now kind of have an opening here to go back down to 50. But, look what's happening here. They're propping it up here, and they're propping it up here at this, just above the 21-week moving average. And this was something that I was watching coming into the weekly close, was where do things shape up as we go into the week, as we got the close, right? And we did get a close above the 21-week moving average. And you can see new candle opened. We got a wick, just barely below it, just barely, and then recovery. So we're now in this tight
one
range.
Pixel below.
What's that? Yeah,
it's like
exactly.
1 pixel below.
So this has always been an important level to me. And as you can see, ever since we lost it back in June, we've had a hard time staying there, right? We've not been able to convincingly hold it for a week. And so we're already starting this week with just, it's like the market's just winking, giving you a wink and letting you know, we can break this if we want. And so to the downside, this is an important level to hold. To the upside, this is an important level to break, and that's the 200-day moving average. And look at this: 1 rejection, 2 rejections. This one didn't even have a chance. 3 rejections. This one wicked up to this mid-cycle top, rejected, and now we have yet another rejection. So the rejections are not good to see. However, the support on the weekly is good to see. So maybe we're just wedged here in this very tight range, and that, that conceivably lends itself to opportunities with alts.
With alts.
Yeah, because our what's happening with, like,
makes sense. I just hear you don't speak about alts.
I don't. Well, I don't.
So my next question is: are you looking? I know, but my next question
it's seldom appropriate.
Are you guys looking at alts right now? If this presents an opportunity for alts.
Well, I have noticed that.
Go ahead, Mark.
Yeah, I have noticed that like some of the obscure meme tokens in recent weeks have been coming out of nowhere to make new all-time highs. And this is, there are hallmarks of the beginning of what people will refer to as altcoin season. And it's sometimes these like very unpredictable moves and these like very aggressive, like hockey stick shaped, candlestick charts that tend to sort of punctuate the beginning of it. Because a lot of those, I mean, the culture is always changing, but historically people sort of rotate out of these huge gains that they get in meme tokens and sort of rotate into other things kind of slowly, because meme tokens are like very illiquid, which means that you can move the price very, very quickly, but in both directions. So when you try to exit from these large positions that you might have, you can dramatically impact the price. So people kind of get stuck, and they do things like, either try and take loans against them if there's a lending protocol that will support that collateral, or they will sell them slowly and move into something like, ETH or something else if they're convinced that the market's going to continue up. And so, yeah, like I have noticed that there is like notes of optimism within the altcoin community when there hasn't been before. And there's no real rhyme or reason to it. So like, ETH moved up a little bit, but like not too much. But then, yeah, these obscure meme tokens are actually performing relatively well. It's times like this that I really wish we had Crypto Choreo back on the call to walk us through the
his Dune dashboard. I literally just clicked off of really quickly so I can go and check out his Dune dashboard. Curious to see. I haven't seen him tweet anything on it recently, but I could have also just missed it. But I'm curious to see what his thoughts are on this too, for sure.
Yeah, I have noticed though that it's not necessarily a part of the narrative, because like the Choreo was always like very narrative oriented, and justifiably so. Like that's what he's built his entire dashboard around. But I don't know about you guys, but when I've been on Twitter, and this could be just because the Twitter algorithm is like getting worse and worse.
Oh my God.
But I haven't really,
Awful.
It's getting pretty bad, right? But I used to see a lot of this kind of like meme coin, altcoin spam on Twitter, and that's when you kind of go, okay, like this is now culturally significant for this moment in time. But this time, I'm not really seeing that. Like, it's mostly, stuff about the U.S. election, stuff about Israel and Hezbollah, stuff about, Nvidia stock. So I'm not really seeing the same kinds of, like, at least social cues that used to mark these things. So, I could be wrong about that, though. Like I said, I no longer trust the Twitter algorithm. And if Choreo was here, I'm sure he would give us a more quantitative approach to it.
Would he tell us that the Twitter algo is also screwed up? I mean,
I don't know. Well, he doesn't rely on the algorithm.
He's on the podcast for now, you guys.
As many times as I've tried, and unfollowed Elon, he still shows up at the top of my feed every single time I log in, regardless of And I feel like you have to be careful about what you say. I got banned for a comment about Elon before he even owned the freaking thing. So now that he owns it, like
you offended someone.
Yeah.
Somebody reported you. Yeah. For everybody who, just to really kind of bring everybody up to speed, Crypto Choreo was someone, he's a narratives trader, data scientist, wonderful, wonderful person. He was on the show with us for quite some time, just shy of a year. Wound up getting a full-time position in the industry, wasn't able to, unfortunately, it was sort of a conflict of interest, wasn't able to continue the show with us, but still who I consider a very, a friend, somebody that I respect his opinion and his research, really. So the Dune dashboards that we're referring to, I did just share that in the comments. It's dune.com/Crypto Choreo. I'll put it up on the screen as well so you guys can check out his Dune dashboards if you're not already familiar with him.
Yeah, definitely worth spending some time in that guy.
Yeah. I didn't mean to cut you off. I just wanted to make sure that our viewers were all, who is this person that they're suddenly talking about?
All right. I see. I got a bunch of comments in there. I haven't been following on the comment line.
Yeah. Let me see something. I just saw the XBT 4D. That one wasn't showing for me earlier. I left the
sa-
screen and came back, and now I
he's-
see this here. So
he
sorry.
says the top range of every bull market has been indicated by the first touch of the 50-week moving average. And
Let's see it.
so let's go to the weekly chart.
Is that true? That's an interesting statistic. I haven't heard of that.
The first touch of the 50 was way back, August 5th, when we had that carry trade crash from the Japanese carry trade. And so we have, we've not made a higher high since then. And that's really what we're looking to see, right? We've not broken this mid-cycle top. There's I don't even really qualify this as a higher high, but just anything above that level, 65,100 was the last touch of that level. And this is higher high to me means we're up into this 2021 top, and then ultimately where were we, 71,900 range. We had two touches up here, and so this is what needs to happen for this to get into a breakout. We've got to get above this 2021 mid-cycle top, and whether that's one candle that shoots through or we consolidate here for a bit, and then same set of circumstances here with the 2021 top, which has just been proved to be a huge challenge since we first interacted with that level, right? So after dozens of rejections, ultimately, once we break above that level, I think then we're in a good position to go after the all-time high, and then you go into price discovery mode from there. But so much needs to happen for us to get there, and I just would be not saying it can't happen, but I would be surprised if it happens before the election.
Meanwhile,
before the election,
have you been paying attention what's happening on the gold chart?
On the gold chart?
Yeah.
I was just actually looking at that not too long ago. Let's throw gold into this one. I was engaging with somebody on X about Litecoins, and listen, I've always felt like Litecoin was like undervalued.
Yeah.
We've talked about Litecoin quite a bit when we talk about different alts and things.
Right. Well, when I first got in crypto back in 2016-17, it was a top 3, top 5 asset by market cap, and it's just and at one point they were sponsoring my hometown NFL team and stadium. Don't know what they were doing with that partnership. Never saw anything tangible come out of that partnership. Something may have happened, but I didn't.
They raised awareness. People knew who they were, right?
Then again, we also had FTX Arena for the
yes,
for the Miami
we did,
Heat,
and everybody knew who he was too.
Right.
But they were right.
Right. So nonetheless, they're always saying that Litecoin's about to make a move, and Litecoin is has got 100% uptime, and it's faster than Bitcoin, et cetera, et cetera. All good things about Litecoin, but none of it is translated into price so far. And his comment to me was that it lags in price action to Bitcoin because of the difference in supply. Well, that argument holds zero water, because if you look at all of these other coins that have way more supply than Litecoin does, like Solana and Doge, Matic, like his argument did not hold up. So rather than say, what are you freaking nuts? I just said, if that's the case, then explain this chart, because doesn't seem to coincide with what you're saying. So let's you want to add gold to this?
I wasn't going to say add it to it necessarily, but it's just an interesting chart right now. It's very to me, it looks very overextended.
Well, you pull it up. If you're charting it, you show it. You show
Oh,
it.
sorry.
You show it, big boy.
Hey.
My pleasure. But it is rallying in quite a profound way. Here we go. Yeah, and so you can like it's you can the only other
Why is it
time
so
gold was
small?
this over.
What are we looking at?
Yeah, let me.
It's like taking up a
This,
fraction of. Okay.
is it?
Is it me, Keith, or does it?
I can make it bigger if you like. I mean,
That's fine.
it's a
Go ahead.
not as chaotic a chart as Bitcoin is. But yeah, the last time the last time gold was this overextended was way back in August of 2020, right before the right before the capitulation to COVID. But yeah, like it's been up and up. Like it really is starting to look a lot like this this historic move from the bottom in September of 2018 to the top in August of 2020. But yeah, it just keeps going, and it doesn't really matter what time frame you look at this on. It looks just mega bullish on every single time frame. And I'm not saying that this is remember when I say that things are moving like this, it means that you should have bought it, not that you should buy it. But yeah, this is this is I've tried to bring attention to the gold chart in these calls previously, especially the price of gold compared to commodity materials, right? Like the gold per copper chart.
Unmuted. You also
Yep.
said though, right, when Bitcoin was at 25 and you thought it was going down to 12, this isn't the time to buy, right? So, I mean, it could very
Yeah,
well
I mean, I'm
continue
not.
in this direction if you're looking at how.
That's the
I'm
old
not a fortune
adage.
teller.
That's the old adage that time in the market is better than timing the market.
Yeah.
Right. So, and that's, I said, I think before we got on the call, it's getting harder and harder to trade. And
Right.
I
Yeah.
find myself trading less lately. And I remember, when we were down in the low 60K range with Corio, and he said he's loaded up and he's holding back
Mhm.
then. I don't know if he's changed, any of his perspective since then, since rate cuts or whatever. But interestingly, I'm looking at the what XBT had just shared with us about the 50-week moving average, and I'm looking through
Is it
some
true? Like,
history.
that's a really interesting statistic. I've legitimately never heard that before, and I'm going to be investigating it immediately after this call.
So let me go to a longer.
Keith, while you do that, I want to let Mark finish his thought because I didn't mean to cut him off. Mark, I want you to finish your thought with the gold silver here.
Yeah, so there's just one more thing, and this is something that I heard recently from like 3 different precious metal traders, and I've never heard it before. And that's that when the price drops versus silver, it suggests that the market is turning risk on, right? Because the price of silver generally is just more volatile than gold is, and gold, is relatively boring, low volatility, but is seen as kind of like a safe, store of value in it and all of those things. So yeah, back here in May, you can see that the market turned very suddenly, sort of risk on, right? Or at least in precious metal trading circles, that's what this would indicate. That there was, and it has to be these, the traders would look at this and say that this kind of violent move is indicative of people moving towards a less risk-averse attitude when it comes to trading these things. But then in July, you see that it completely changed its mind, right? And these kinds of very very sharp moves to the upside in the gold price versus silver suggest that the market is now becoming more cautious. And this is coincident with the fact that gold is making new all-time highs. and the fact that unemployment is starting to starting to increase, and the fact that the yield curve is uninverting, and everything else. It was just an interesting anecdote, and I wanted to share it because I hadn't heard that before. But after hearing about it, I have had a look at the values on silver prices, and it's true. Like, the price really is more volatile, and if there are people that are getting bored with the markets and they are looking to make a faster dollar, they do tend to switch into gold. And so I just wanted to bring that up because it is looking like the market was in a period of being more risk tolerant, and for the last for the last little while. So basically, for the last month and a half, the market has now moved back to protecting itself. And I just thought that was an interesting data point, and I wanted to share it because, in general, we talk about Bitcoin on this call more than we talk about anything else. And Bitcoin performs really well when the market is in like a deep greed frenzy, right? When it is very, very risk on. And so that we're in this kind of, or coming out of this, I should say, risk tolerant period. It suggests that, traders in the market or the market itself, we're trying to measure sort of a mass psychology, but it suggests that the market, is taking a more considered view of what it does with its money. And for that reason, I'm not expecting Bitcoin to explode to the upside anytime soon.
It's another interesting indicator outside of like the usual sorts of indicators and things that we generally tend to look for.
Yeah, for sure. And there's so many things to pull from. I think probably one of the most challenging parts of it all is that so many variables are so different this time around, that you just have to wonder how much history will repeat itself. So just real quick, because
bring
because we always verify, don't trust, but I do trust XBT, by the way. I know him well, and definitely a reliable source of things to think about for sure. And so he had mentioned to us that the first touch of the 50-week moving average tends to mark the range top of every bull market. And so that means, that's the beginning, that's marking a breakdown. And so in this case, and I look at, and this is why I look at the weekly moving averages so closely, and the 21, obviously, when the moving averages aren't wound up, the 21 is an early indication over that 50, right? So this is going back to 2011. We saw a touch of the 50. That's the red line here. And then there was how long between that? That was September 5th, and then it took until November 14th. So that was 2 months until things bottomed out. And how much was that dip? That was a 61% pullback that then delivered, a mere 24,670%. In case you get excited, folks, those days are over. So don't plan on don't think we're getting 25.
Sorry, I even mentioned it.
Don't think we're getting 24,000% out of this move.
No, we're getting a $21 million Bitcoin this year, didn't you hear?
Right. And so we saw again back in 2014, we saw another touch, and this wasn't an immediate breakdown, right? Similarly to what we're seeing now, we saw a wick through it, some consolidation, reclaim of the 21, and then another breakdown. And that breakdown was much bigger, obviously, and gave us, what did it give us on both sides? Let's see. We'll call it.
I think the drawdowns are relatively consistent, right?
71.5%. and then the upside was 3,215%. Now the
Actually,
difference here,
this is,
this was a long time though, right? This was
Mhm.
August
3 years.
August 4th to 2014 until 2015. That was a year.
Yeah.
This
Um,
is a really interesting characteristic, by the way, that like you're demonstrating it visually very well. Is that the asymmetry and the risk in Bitcoin is becoming quite pronounced. And what I mean by that is actually something that XBT said when I met him in Ireland, which was that the the downside in a bear market on Bitcoin stays relatively consistent, but the upside is
is
constantly
diminishing.
shrinking. Yeah. And so it's interesting. So like getting into Bitcoin late, you're actually taking on like exponentially more risk than I mean you 20 it's obviously hindsight is 2020, but you are taking on now exponentially more risk, at least according to historical data, compared to someone that entered the market last cycle.
Right,
And that's an
but
interesting observation.
the reward is still exponentially bigger and better
Yeah,
than most things, right? So
absolutely. Yeah. That's not me saying, never buy a Bitcoin, not at all. I'm just saying that the what you observed earlier in the call when you said that, some of these things just don't look like how they used to, you know.
right,
Like we
right.
do expect these things to change because the risk profile of Bitcoin has to adapt. Because there will be people that just are recognizing that pattern and refuse to take risks. At the same price points. I'm one of those people. You've heard me say that I would prefer to trade Bitcoin at these rather low valuations because I just do not want to expose myself to that downside. And when I feel like a lot of that downside has already been absorbed, then that's when I'm getting interested. And that
Right.
like the more people like me that show up will change the shape, right?
Okay.
It will
Okay. So
change
we're
the shape of the
seeing.
market.
So this is now the third one. The third time where we've seen this is now 2018, coming off of that magical run to 20K. Let me just reminisce on that for a moment. This is where I bought my first my first $100 of Bitcoin was right here.
That's not bad at
And
3K.
no, actually it was let me zoom in. It was at 6K.
It's like
I was
pretty
trying to
decent.
I was trying to get in under 6K and I got $6,001 by the time my order cleared. And so yeah, this was my introduction and my euphoric rise. Oh my God, it's going to be amazing. And then boom, bottom dropped out, right?
Welcome to the club.
This was the school of hard knocks. This was my undergrad, by the way. I got my and then here's where I got my master's. But we saw what 60 and 70, 75% on those first
Yeah.
couple. So here's another one, 60%. And look, it's the 200 week moving average that's holding things down here. And so we got that bounce. We went another 750%. And again, now this is the only anomaly in what XBT said. This marked the top, and many technicians, XBT included, say that this was the true market top of that cycle. And I believe that. I agree with that. But we touched it, consolidated briefly, had a relief rally. I believe this was heavily manipulated. Nonetheless, we get a lot of that in this market. And then we again saw the breakdown, and this was a big breakdown, right? At that point, we saw, let's see from here. Let's go to this one. And how deep did we go? We went another 66%, right? So we're right in that 60 to 70% range, right? And so where does that set us up at this point, if this were to be true? And this one now, broke through the 200 week moving average, which is really the first time in history. We had wicks, like from COVID, but we never had a real breakdown from the 200-week moving average until June of 2022. And so now, it took us a while to get back above that. Might that come into play again? So if we consider this a possibility that we have this touch here at the 50-week moving average, might it play out like it did here where we get this relief rally? Or are we going to see a more of a breakdown? And where might that breakdown take us? Let's see. What's 60% look like?
24.
61%, 60% gets you to 22K. All right. I know you like that 20K number. That's 63%. And 12K would be 77%. Those are all in the realm of possibilities. But I just don't, I personally am not convinced that's happening. I would need to see a breakdown, and I left my previous chart. Let's get that one back, and I can show you the trend line that I'm watching anyways. That would invalidate, would validate that the bull is done, right? So at the moment we're in a recovery from this, not much of a recovery because we haven't cleared these cycle tops. So this is really going to continue to be what I watch. So an actual breakdown of that 50-week moving average, as I said before, we have this double bottom that we set here, which you can see on shorter time frames. This is a bona fide double bottom. We could, didn't mean to do that. We could conceivably, if we lose that weekly, then, does this hold? And if not, then here's our trend line. And, really, this would probably, for me, this would, if we lost the weekly and couldn't reclaim it, that would
target.
That looks like the end. That looks like the end of the run to me. And then this is your last line of defense in terms of maintaining any integrity with the moving averages, which at the moment is down around 40K. And this is obviously an area that has some historical significance for me. But at the moment, the fact that we're holding above this 21-week moving average makes me pause before I make any big moves.
Well, thank you guys.
Always pause before you make a big move.
Yes. I just throw in the towel and say I'm not doing it.
Well, listen, I'm
doing it and then I throw it. You talk about the first time you bought your first Bitcoin or when you first bought Bitcoin, right? That was me when I first got into crypto.
Well, I'm pretty well exposed.
Pausing. If I paused, I wouldn't have done it.
I'm pretty well exposed at this point. It's a matter of, do I want to buy more at this price? And if we're going to see a breakdown, am I going to sell it?
Are you going to sell it? Yeah.
And seems like every time I sell it, I'm having a hard time buying it cheaper. Yeah. So I'm reluctant to sell too much.
And this is a strategy. This is a trading strategy, right? Hold off, sit back. You don't have to trade in order to have your strategy. We have to, unfortunately, it's been a little over an hour. I want to thank all of our viewers, Keith and Mark. Thank you guys so much. Is there any final thoughts that you guys have? Keith, I didn't mean to cut you off. If you wanted to still give us a little something here.
I think you have to be, you have to resist the urge to overtrade.
Yeah.
Pick your targets and have some conviction on your targets. And that's really, what I'm doing at this stage. Like I said, I'm not trading a lot. I am looking for opportunities, but, I'm not pushing a lot of buttons these days. I'm letting my automation pick up, some small positions to DCA, but I'm not doing any big limit orders, except for those that are down, in low territories, right? If we
Yeah.
dip to 50, I would buy here. Obviously wanting to see a bounce before I do that, or having a tight stop, right? I do have a limited order there because it's not like I'm going to get the call that, hey, we're going to 50. But if we lost it, then I would close that pretty quick. Otherwise, like 50 and 44 are the two levels that I'd like to buy. But if we lose that, then obviously things are breaking down and I'm going to give some money back.
Right. I'm going to give some money back. I wanted to share XBT throughout his NFA and not financial advice, not suggesting any trade disclaimer here. So I wanted to share it on their behalf. I know we say it and we joke about it, seriously joke about it, but there it is from them also. Keith, thank you. Mark, thank you guys so much. Definitely kind of keeping an eye out to see where the market, not just the market, but markets are headed here over the next, few weeks, few months. So I think things will get interesting, we're ranging, but.
And as
We'll
you
find
said,
out.
sitting on hands is a strategy.
Yeah.
Out as a position, sitting on hands is a strategy.
Yep. All right. Well, thank you guys again so much. Thank you to all of the viewers. We will definitely see you next Tuesday, same time, 4 p.m. UTC.
Thanks, guys.
Thank you, Joe.
Have a good one.
Thanks,
Travel
guys.
safe,
Thank
Mark.
you. Thank you.
Bye-bye.
Always Mark traveling. See you guys.